think from morning you have been having a lot of information overload. So we'll try to relax it by passing a few entries which we all know. So we'll just see what could be the major changes with respect to the GST and what sort of entries we have to maintain in our records to see that it is easy filing of returns. We are going to see how we could reduce our burden by looking at the accounting entries, and from the accounting entries we should be able to match with our returns as such. So that is what will be our total framework or the note for the session. So before we get into the topic, one small brain teaser to get us all into the groove. They tell that once there is a change in the thought process or something different is there, so for every 1 hour of reading they tell 5 or 10 minutes of a break we have to take. So we'll just take a break for 5 minutes by looking at this particular thing. So what could be, which one is going to fill first? 7. 11. 7, 11.
7 plus 7.
1, 2. I think we are very close. 7 or 11 should be the nearest answer. I feel it is 11 because there is a connection from 7 to 10 again, which has been given, one overflow has been given there. So it appears to be 11. But anyway, these all are a part of our assumptions and presumptions, whatever we are doing under the GST. So we can assume whatever we want, we can do whatever we want till an audit comes. So here also when we look at filing our returns, this is how we are going to have the information. Today looking at the provisions, I think a lot of provisions you have seen about the accounting entries, you have seen a lot of inputs from morning. So now we have to go and see or open all the taps and see where the water is going to leak. So we have to see whether the information is properly gathered or not. So with this small backdrop, I think we have to gear up for the accounting entries, because I think Form 3B, I think we will have to file before the 20th of August, which is very close by. So first stage will be filing of our Form 3B. I think there's a session on return. Somebody else will give a little more insight on it. I'll not get into that topic. So that is the first thing we'll have to look at. And wherever there were removals to SEZ and EOUs, we need to look at the options when SEZ is there. So what is the LUT or a letter of undertaking? So that has to be executed as per the provisions if you are removing to a SEZ and based on the values. So these are two small things which I felt are very important, and there is off and on too many notifications. FAQs, lot of FAQs have been released by the government. Even today we were seeing one of the FAQs on multiple questions have been answered by the government, and this is available on the cbec.gov.in website. So you can go through those FAQs also, which will help us in understanding. It could be a valuation or the rate issue. A lot of them are based on the issues as such we have been facing. So their notifications have been issued, and one notification the day before yesterday has been issued with respect to the ICCL transaction, where they tell only the end point, whoever is the importer has to pay the taxes. The intermediary need not pay the taxes. That is what they have told, but that is given under customs notification as such. So based on this, we will try to take the session forward. So before getting into accounting entries, what do you think is most important? Do you think accounting entries is the first important, or should we prepare ourselves for accounting entries?
Accounting entries is successful. From that one, basic will move.
Base is accounting entries, but for that passing of accounting entry, what do you think is the base which is required for passing the entries? Huh? What is the base for passing the entries now? Huh?
You understand what is the transaction.
So you need to understand the transaction. First, we'll have to understand the transaction. The second one is we need to have the required software. Or today we are maintaining everything in software, and there could be a possibility that few of them are maintaining still manual also. We will not remove that option, because there are few small dealers or people who yet want to still maintain in the manual methodology. So what are all the fields which are required has to be captured by looking at the options. When we get into the software, then we need to look at how our configuration of our books of accounts have to be done. So based on configuration, what are all the configurations which have to be enabled? Because here we have an issue, because till 30th June we were following one methodology of accounting. Suddenly from 1st of July we have to make a change for all these heads of accounts itself. So what is the methodology you are going to adopt? In Tally, earlier we were following 14.5% VAT separately, 5.5 VAT separately, and we would also show service tax at 15% separately. These were the different heads we were trying to maintain. But from 1st July, what is that we have done? How have we configured our books of accounts or configured the ledgers? This plays a very vital role, because once the ledgers are not configured, or if they are configured and the configuration is not proper, it is like we don't get the desired result. Why? Because it is like the garbage in, garbage out. So whatever we give, the computer throws the report. But we should be ready to know whether what we have taken a step is properly done or not, has to be looked in line with our reporting as well as our day-to-day business environment. We need to look at our MIS reporting also per se when the entire transactions are happening, because it could depend on our business scenario also. See, I have a branch. For example, I have an office in Bangalore, I have an office in Mysore, I have an office in Davangere, I have an office in Hyderabad. So assume that there are 4 business places. So earlier we were having probably only 2 tallies, or if we had these 3 separate units, you had Bangalore, Mysore and Davangere. If you had these 3 units as under excise, then you are maintaining separate books of accounts for these 3 entities separately. But how is that you are going to take these entries when we are looking at the GST scenario? So if it is within the state, we can still have it under one single tally. The other one is, because we have a branch in Hyderabad, should I have a separate tally itself? That would be the first decision what you have to make. We can also have the entire thing in one tally also, but if we have to have everything in one tally, what is the head of accounts we need to bifurcate? How are you going to identify if there is a staff welfare expenditure of Bangalore, Mysore, Davangere and Hyderabad? How are you going to have this separately? Okay, even if we consider that this all 3 are in within Karnataka, for our MIS purpose, do we require this breakup? Do we require this breakup for our profit analysis? If we want to do a cost cutting on a later date, we need to understand these options per se. This would have a very important aspect which we need to look at. So first of all, we need to understand the business scenarios and the type of business we are under. What is the type of, why is the type of business very important for making entries? Is there a change in the entries? Because entry is going to remain the same, right? Is it going to change? Earlier I had a purchase, I had a sale. I had a purchase, I had a sale. I would do that. So is that changing? No. That you agree that it is not changed, so that will remain same.
The system may be light difference.
Yeah?
System may be light difference with it.
System, probably in the system there could be a slight difference in the rates, because now you have a different rates, we might have to configure the rates. So that is the first thing what has to be kept in mind. Second one, we have to look at, say we will take another example of a works contractor. It could be a works contractor or a person who is doing computer hardware and maintenance, assuming. So he has both material as well as labor. Earlier how we were accounting, what is going to happen now? So first we need to look at based on the nature of business. Earlier we were following a basis where he was paying 70% under VAT and 70% under service tax, 75% under VAT. He would go under rule 3 to M and he would have a higher rate of tax and he would collect tax on 145% of the value. But today he will not be doing that. But today we have an issue. What about the classification of that entry? Whether it is to be considered as goods or whether it is to be considered as a service. I think somebody else would have explained already about these aspects that you need to get into the schedule to identify whether it's a goods or a service. Then you identify what is the rate applicable. So here, what is the principal component when you take a service provider with respect to this transaction? What do you think? Is it a goods or a service?
Goods, sir. When supplying computer and all, I will say it is a goods, sir.
So if it is supply of computer and installation becomes a part of it, it's a goods. But if I am calling him regularly on a monthly basis,
the major is issue of computer. Installation is very little. The primary business is computer.
So that is for a computer vendor.
Yeah.
His principal supply becomes a computer. But if he is a repairer, he only repairs the system. Then in that particular case, it's a service. There also you have another specification. The warranty, whatever he gives a coverage, he tells per system I will charge 500 rupees per system. Whatever happens, I will take care of the issues with respect to the software. Or if it is not working, I will do everything and give free. But if there is an additional if there is a aspect where the component is replaced, then in that particular case what has to be done? So the component cost is billed separately. But if he gives you a comprehensive thing where the material is also included and he gives you a labor also, he tells I will charge you 1000 rupees per system and that is going to be per annum. This is my contract. 1000 rupees per system is my contract. If I have 100 systems, it's going to be 1 lakh rupees. 1 lakh rupees is the contract value. Whether it's a goods or a service now.
Service.
Why? Because goods also is included and 80% of the value will be goods, assuming.
My major is servicing.
So even though there is an amount of goods getting involved, then you need to look at this could be treated as a service. So these are the issues which could crop up and we need to look at that aspects. So with this we'll just look at the aspects. One is the configuration, then list of ledgers to be created, journal entries for outward supply, inward supply, entries which are to be passed after the returns are being filed or during the time at the time when the returns are being filed. Then you have the transition entries to be passed in your books of accounts. So this is how we are going to design the session. And the first aspect is the technology or the software which I have already told you. Then the success or failure or implementation of the GST is heavily dependent on the technology. GST will create a paradigm shift on how the small businesses run their day-to-day businesses. So initially we thought GST is easier, but if we look at, if we have to grow big, it appears that we have to be big. That is what it tries to look at, because earlier when you look at the SEZ provisions, the SEZ had to do a lot of compliance. Now they have made all the small vendors. A person who is supplying tea coffee to SEZ has to execute a bond today. If he has to enter, he has to be registered also. So how is this going to happen? This is only the time is going to take shape of all these things. The changes in accounting entries that one has to follow under the GST law, that also we'll try to look at. Configuration of the accounting systems. Here initially first we need to look at the item name, HSN code. So this SAC also has become a part of the HSN. So 99 has come here. So you have to identify what is the tax rate and the unit of measurement. These are the minimum basic requirements for a software which has to throw up. Then we have the master setup, which is the sales purchase wise, which I was trying to discuss on the sales, where we told, do we require, as I was telling, I have sales now today at 0%, 5%, 12%, 18% and 28%. Do I need to have a ledger in each of these as a sale, under sale you need separate heads separately, or under tally today they have given an option where it is defined based on the product. So if you define the product, then again you need not define the separate head. As a sale separately we need not again bifurcate into classification wise is not required. So there you need to immediately take a decision whether I am going to follow that system or this system. Because under tally, once the product, at product level, they define the rate of the product, whether it is 5%, 12%, 18% or 28%. So that based on that you are going to define how many ledgers you are going to have created under the group sales, under the group purchases, and you are also going to have other details which are required for filing, which is the customer master. For each customer we need to have the details, that is the names, addresses, state, GSTIN and PAN is mandatory. But what about if it is a different branch? So if the customer has different branches, then for each of the branches also my masters have to be ready, else when we are sending the goods it becomes difficult for us to identify where I need to send, or I need to create that master at that point of time. So better if we are knowing that this customer we are going to have multiple places of businesses and we might have to ship to different locations, then the masters are ready with respect to the customer master on this one. As I told you, with respect to the sales we have, similarly we have to have a creation with respect to the purchases as well. Then we have tax ledger, which is the, we have under the tax ledger, I think Prakash was also discussing, we have the electronic cash ledger, electronic credit ledger and electronic tax liability ledger. There are three accounts. To explain this in a simpler manner, I have bank account, I have a SB account, I have a current account, I have a OD account. So we can have something like this to understand that this is how the bifurcations are there. So if I am entering into a credit, I put the OD and that is being set off. So that is where the outward supply, whenever I put an outward supply, it is more like a OD. Then my cash ledger is like my savings bank account. So I deposit my money into the SB account, and at the generally whenever there is an excess fund in the SB account, I transfer it to my OD account. There one question could come up whether OD account and current account or SB account are one and the same party. Do you think the same way even our GST-R ledger accounts have been created under the portal? So each ledger you will be able to look at your ledger as to how the entries have been running through. So you have a running ledger in the portal of your customers and what your purchases and what your sales are there. So these outwards or outward supply or inward supply, this is how the transactions. And again under this we have to look at, depending on the cash ledger, we have tax ledger, we also have to look for whether it's CGST, SGST or IGST. So again a breakup has to be given. Under the electronic cash ledger I need to have three components. One is the CGST, SGST and IGST. If there is another ledger for the UTGST, maybe if we have branches located in a union territory, then an additional, we need to have a separate ledger which is created there as well. Then with respect to the timing, the transaction time, so that is nothing but the timing. So based on that we have party ledger, revenue ledger, then the item, what are all the things which have to be captured, then we have the amount to be entered, then we have the tax type which could be automatic. So as I told you, the tax type, if it is in tally, the product you can fix for the product you can fix the rate, and automatically the rate is being disclosed in your, when you are either drawing the purchase order or when you are drawing an invoice, automatically the data gets into that particular place. Then the place of supply, which is important. What happens if it is a bill to ship to transactions? So I am billing it to X but the goods are going to Y. So that also has to be captured, because when I am raising an invoice it will be on bill to, but when I am sending a e-Sugam, generally it has to go to ship to, because for whom the goods are going, that has to be declared, and that aspect is to be taken care of here. Then we have the expenses accounting, capturing of input tax. See, as I think over in the last session also, you have been listening that on unregistered dealer purchases or the URD purchases, or there is a RCM category, that is 93 and 94, both of these put together. So you will have to capture that data. So every expenditure you need to break it up into three types of categories. One is from a registered supplier, has to be shown separately. The second one is going to be the unregistered portion, and in unregistered again you have below 5,000, above 5,000. So here in few of the cases, yesterday we took a call in one of the claim that I am not going to go for the 5,000 exemption because I have to maintain much more data if I have to have that 5,000 exemption to be captured on a daily basis. So the client decided I will pay the entire tax, I'll set it off against my outward liability. Okay, it is a 1 month working capital issue for me, but I don't want to have hassles. Every month I have a standard template. So I have the unregistered dealer purchases separately, I have the registered dealer purchase, total put together has to match with my purchases. I don't want to get into.
But anyway, you will not remove more pocket, but you can have a credit also.
That is why. So you will have to look at, no, but the outflow also has to be considered because it's a working capital issue. Assume that they don't have the sales in a particular month, but I am paying the entire amount in this month. Then in those cases the working capital could be an issue which has to be considered. So when you are drafting this also plays a very vital role. Then you have the refund vouchers and the payment vouchers. So I will not get into the technicalities because all of this has already been dealt with in the morning.
One question.
Yeah.
In case of GT unregistered, does he fall under 90 or 90?
He falls under the RCM category. Whether he is registered or not registered, it's your responsibility to pay.
Do I treat it as a 93 or 94?
There you can treat it as a 9.3 only. 9.3 would be a better option.
Because between 90 and 90 there is a difference
Correct. Because if it is a GTA, it comes under 9.3 because whether it is registered or not, it's your responsibility. So that's the reason 9.3 only has to be taken. That is my view. So then the important aspect is within 180 days, if I don't make a payment to my vendors, then my reverse has to be reversed automatically. So this is a tracking which also has to be inbuilt into the system today. From now on, we have to see how much are our creditors and have we paid. Earlier we were looking more on only the debtor side, whether we got the money or not. That is the only thing we were looking at. But today when we are looking at this, we also have to see that we have made the payments within the next 180 days.
In case of service provider, sir,
Anybody.
earlier 3 months for service tax, sir.
Yes.
Now under this for service also 180 days.
Yes, whether it is for goods or for services, it is 180 days because it's on the supply today. So whatever it is, I have to make a payment within the 180 days. Even if my contract terms that the payments can be paid after 1 year or 2 years also, here we have an issue. So that what can an entry be passed, can we convert whatever my payable into a loan, has to be looked at from today. Can it be called as a unsecured loan? Means because I have not paid but my contract has given a time of 1 year or 2 years. So just because in the contract I have a time of 1 year, so can I assume that I have made the payment and the payment is given in the form of a loan? Can I look at that as an option? We will have to wait and see. Then with regard to the debit notes and credit notes, you need to have the mapping of data which has to be taken up. Then under invoicing we were just trying to look at one, we could see the composition supplies which are there in composite supplies. Then we are not supposed to collect anything, so we are going to issue only a bill of sale. But in case of warranties and free supplies, I think Prakash discussed about it. Then we get into the tax invoice and a bill of supply. This is also clear. So generally if we have a combination of exempted as well as taxable, I think there is a clarity that today I have to raise a tax invoice. But if I am only issuing a exempted product, then I have to issue a bill of supply. That has to be kept in mind. Then composite versus mixed supply. So this also, or I think you would have heard about it. So the main aspect what I want to bring about is what is the system we are trying to look at before the configuration actually sets off. Then the buy one get one offers, how are we going to show these in our accounts, in our invoices? When the invoices are being raised, how are we going to look at this? So should we show this as a free supply? One, if you buy, the other one, is it free or is it a discounted supply? Actually, where even though I am showing it as a free, Even though it is free, it is nothing but a discounted product. What is being given is a discounted product. But to avoid litigation with the departments, see, our department people don't understand all these sort of intricacies. They just see if it is a free supply, a show cause notice will be issued. So better can we divide the values to make that, or put it in a manner that the entire value is being spread over these assets, or these each of the items whatever we are taking. This could be one of them.
Make a discount.
Or you can put it as a discount also. You put the entire thing, put one discount for the entire thing. This also could avoid a lot of
Since you are
litigation.
maintaining inventory,
Yeah.
so last discount is
Yes. Then with respect to the works contractors, whether it's movable, immovable, this is one we will have to see, and I think we just discussed one of the aspect of computer supplier and the service provider with respect to computers. So then with this, then we'll have to also look at the GST, that is the transportation on GST. This is one of the aspect. So what is that you are going to charge, whether it is going to be, the product is going to get included in the transportation is going to get included in the value of the product, or should I show it separately? If it is shown separately, what will be the impact on it? These are aspects which have to be kept in mind.
one point.
Yeah.
The movable bar AMC, can I split the invoice because of the 18% and 12% whatever the rate difference is there? Or I make the invoice separate to split the invoice?
I think it should not be an issue, but again it depends on the contract, how the contracts are going to be defined, and it depends on the nature of business as such. So the business and the nature and the industry what is being followed over a number of years, that is going to determine what is the thing, whether I need to split the invoices or whether I need to go for a composite supply, or whether I need to go for a mixed supply, or whether I need to break it up into a separate, maybe supply for goods separately and supply for services separate rate, which could be given.
Computer provider, he is doing AMC also, he is doing service also. Or split the invoice.
It is always suggested that if you don't want to have the hassles of that, you could have a breakup of those invoices where there is clarity, because you also know your profit margins with respect to each of the things separately. Then we have a bill to ship to transaction where the supply state is Maharashtra, bill to state is Karnataka, then ship to is Tamil Nadu. Then how am I going to capture these invoices? So is it possible to capture this invoice, this information in the software whatever you are doing? See, manually our bills can be generated in whatever we want, because most of us follow either Excel, or if it is a manual book, we also write ship to also we can write, there is a separate column which is there. But in the softwares, are they given an option for this or not? This has to be reloaded.
With example, bill to ship to, is it with example can I?
Sir, this example only, say X of Maharashtra, he supplies goods. He is billing it to Bangalore, but he is sending the goods to Chennai. So there in that particular case, what happens? It could be it is a IGST transaction very clearly, and here we have different combinations of it itself we could think of, but we'll just look at this only. So X is sending the goods, he has built it to Y, and he is sending it to Z, that is Tamil Nadu, which is a branch of Karnataka. The main same entity, it's a branch. In that case, also there are going to be two different GSTIN numbers. So he'll put it GSTIN number of Karnataka and GSTIN number of Chennai. So he gives this particular transaction and it is clear, there is no issue. But if the transaction, if the third party, Y and Z are two different parties, then Y will again raise the invoice on Z. Even in the earlier one also, because it's a principal head office and a branch, again an invoice has to be raised from Karnataka to Tamil Nadu. One more invoice has to be raised.
So we are raising e-Sugama to the ship to party we are sending. The invoice should come before that, after invoice come afterwards it will come.
Generally what happens is the e-Sugam has to be given along with once the goods are moved. So if the goods have to be moved, along with the goods invoice has to be there, and if the invoice has a condition that if it falls under the 43 items as per the e-Sugam notification or the e-way bill notification, then those items you need to mention the e-Sugam has to be uploaded, and on the invoice you write the e-Sugam number and which is sent. So if it is going for any other purposes, then invoice
is from Maharashtra to Tamil Nadu, I am going to the e-Sugama to Tamil Nadu only.
Correct.
So goods directly goes to Tamil Nadu.
Yes.
Again the Tamil Nadu has to get the invoice from the Karnataka.
Not required, sir. The invoice will go from Maharashtra, whatever is the same invoice will
Again, he is
go.
giving, the Karnataka man has to give one invoice to Tamil Nadu.
That will go. That has to be sent. That can go at a later point of time.
Later point.
Yes. Because this is in a bill to ship to transaction on the invoice only, it is very clear. It is bill to so and so and sent to so and so. And here, as I told you, this options could change depending on the bill to ship to also. So those have to be looked at. Then we get into the ledger creations, which are important. Now under the IGST, so CGST, SGST and IGST, we will have three categories. One, we are going to create assets under input. So one we called as the input CGST and the input SGST, and you have the input IGST. You have three ledgers accounts here. Then we have a provisional ITC. This is called as provisional ITC, is provisional entry. We are trying to bring a control account so that it becomes easy. This provisional ITC return, where generally one is uploaded by the supplier of services, and I will be able to download that 2A, and that will help me to generate the 2. So when I get that information, that should match with my provisional, because there could be a possibility that the vendor has not uploaded his returns itself. In those cases, my credits are going to be provisional. Why is it important to track provisional entries? Because once I have to reverse, once he does not file his returns on time, then after 2 months, within a span of 2 months, I will have to pay that along with interest, because it is 1 month plus 1 month he gives time. If the return is not uploaded by the vendor, then I have to pay the amount along with applicable interest, which is going to be 24%. Because if I am availing any input credit in addition to this, which is a wrong availment of credit, then I will have to pay an interest of 24%, which is about 2% a month. So I need to identify and precautionarily be ready for these transactions. Then with respect to the electronic credit CGST ledger, then we have the electronic credit SGST ledger, electronic credit IGST ledger. We need to have a breakup here, and these are the entries which has to be done. Then we have when we make a cash payment for each of our accounts, then it will be shown as your electronic cash CGST ledger, SGST ledger and the IGST ledger. Here we have to be very careful when we are making the payments. These payments have to be done with respect to those IGST or CGST or SGST, because once it is paid wrong, I will not be able to get a refund of it, or I will get a refund of it, that is going to take a time. So it is better we are more sharp enough and we don't commit mistakes, because this becomes a costly mistake. If say 50,000 rupees is paid, instead of SGST I pay CGST, then I will not be able to set off. If it was a sale transaction, local sale, then CGST cannot be set off for SGST. Then I have to again pay an amount there. At least if there is a mistake of paying in CGST and IGST, SGST and IGST, there you could take a set off. There is a possibility of set off. So then we have the outward supply, which is the local B2B sale account. Then we have the local B2C sales account, because this is required for us, because in our returns also they are asking us the breakup between B2B and B2C. Then we have the interstate, we have the B2B and B2C. So why is this required? So B2B and B2C. So in B2B and B2C, we require it for again our return purpose, where if I have interstate transactions and if it is going above 2.5 lakhs to a person who is not registered in the other state, then that I have to call it as a B2C large transaction if the value is crossing 2.5 lakhs. If it is within 2.5 lakhs, then it is called B2C yes transaction. So this is what has to be captured for the purpose of my GST 1 return. So who all have interstate sales, then for them this aspect will be required to be done. It is not that every entity has to have all these transactions. It depends on your nature of business. Then you have sales, union sales, export sales. So in exports, you have two types of exports. One is export to SEZ and a regular exports. That has to be looked in. And earlier you had a EOU transaction. Export oriented unit transactions were there. Now the relevance of a EOU is only limited to the BCD purpose. So for all EOUs, they have to charge IGST. So IGST has to be charged on all EOU transactions. Then you have the exempted sales, which has to be given B2B or B2C, then you have the local and interstate. So these breakup is also required. Then you have the RCM, that is reverse charge mechanism sales. Then you have a B2B, B2C, local and interstate. So this is how we have to first have a framework of our entries and then start passing these entries so that it will help us in identifying how the transaction. And if we are selling through Flipkart or through Amazon or Snapdeal, then we have to also have a e-com sales account. Yeah.
RCM sale meaning
Reverse charge mechanism like goods transport operator.
purchase RCM purchase or receipt you are having. Sale how would you do?
This purchases is nothing but sales. That is what we mean. Sorry, because any URD transaction will be treated as a outward transaction per se. So then the next aspect will be with respect to the duties. So you need to have 9% output CGST, or if this is one of the example for a 9%, it could change according to your rates. So if you have, as I told you, you could have a configuration based on your item. Once you have done the configuration on your items, then again you need not have a separate thing for each product or each class separately. It could be as 9% output tax, 9% output tax and 18% for output IGST account. So then one account we have to call it as GST on advance also, because we need to track how much of amount we have paid towards advance, and that has to be disclosed in a separate column under the GSTR 1. Then we have inward supply purchases account. Under inward supply, what are all the heads we are going to have? We will have a regular purchase, then we have purchases account, exempted purchase, then we have expenses. See, now what should happen is, earlier we were passing the journals for our P&L account items, but if we would effect any VAT return, then we would purchase enter the transactions as a purchase JV we were calling under tally. So here now onwards we have to pass the purchase JV for every transaction is my view, because you should not pass any entry directly into your P&L account. It has to be passed or routed through your debtor account or your creditors account. So it has to be routed. So you need to pass a separate entry. Then you transfer those entries here. Then we have the current liability, that would be on electronic liability ledger, that is the CGST account. This is the net account. Electronic liability register is our total net value which is going to get set off. Then we have the sundry creditors. Under sundry creditors, we could also group, we know the parties, as soon as we get the parties, we could group them into registered purchaser, registered creditors and unregistered creditors, and composition dealers separately if we have it based on our records. So this will also help us in identifying each of these heads separately, so that henceforth we know, okay, this particular party, if there is some purchases during the month, we know directly that he is a composition dealer and he is an unregistered dealer or a registered dealer. It becomes easy for us to file our monthly returns also. That is another way of looking at the unregistered dealer purchases. Then we have journal entries which are there for the outward supplies. With respect to the journal entries, see, for outward supplies, we are going to have, as I told you, we will have a separate split of entries between B2B, B2CS, that is small, and B2CL. L is above 2.5 lakhs. So once these transactions are there, then we show it as debtors account to local B2B sales, 9% output CGST and 9% output SGST. This is what I am going to have an entry. If I am not putting this separately, 9%, as I told you, it could go under a general heading called output CGST account also should be fine, if my rate of the product is already defined. Then we have the B2C sales that discloses, that takes care of the debtors, which is a local. So here we could also have a breakup called local B2B and local B2C. So this is what you could have different heads itself under the local, so that it helps us to identify for our return tracking. This is one method, or the other aspect would be, if we don't want to have this separately under these things, then you will have to export it to Excel, then you need to have a filter option. So that is another methodology where it could be identified, or we could have an option of creating voucher types itself. Under the voucher types, we could have this specifically done. If we don't want the voucher types, then we will have to segregate the data. Once we have passed the entries in our software, once we export it, there we need to segregate segregate between local, interstate. That we will have to start matching it up. So here, once this helps us, we know once these entries are defined in this manner, this becomes easier for you to file your returns. Then with respect to the exempted supplies, you have a separate head of accounts which could be the exempted B2B. Here again you have different types of transactions, that is the interstate, local, B2B and B2C. So with respect to B2C, there they have asked, because as I told you, B2B separately and B2C separately has to be given in your returns. And in my paper booklet which has been circulated to you, we have given this relevance of this particular with, and next to it the column number in the table of the return also is being mentioned, so that you know under which table this particular requirement has been given, which will help you to identify these entries, why we have given this entry and what is the information. If that column is not applicable to you, then you need not create the entries for this particular ledgers. So you can go and see what are all the requirements, and then you can create your ledgers. Unless and until it is required, you need not create these ledgers. Then with respect to the reverse charge mechanism supplies, which we spoke, so debtor account to local RCM B2B sales. Then we have debtors account local B2C sales, that is 9% output, 9% output SGST. So this is where we give the details of our RCM liability which we are trying to create. Then with respect to the e-com operators, so with respect to the e-com operators, we put the debtors account to local e-com B2B sales, then 9% output CGST, 9% output SGST. So we have a breakup through e-com operators, separate head of account is being created. Because unless and until we have a separate sale account for each e-com operator, or under e-com we will have to track those details. So that will be very important, because they would have deducted TDS. So we should know how much of TDS the e-com operator is going to deduct, which will help you through this transaction, whether they have done it properly or not. Then with respect to the supply to exports or to SEZ, then what will be the entries with respect to the exports or with respect to SEZ. So here you have debtors account 2 lakhs, refund IGST due account, if it is with payment of duty, then 36,000. Then sales, see in exports you have two types of transaction, one is called with payment of duty, one is called without payment of duty. In a with payment of duty, we will have to show that we have discharged the duty on the output for the purpose of claiming a refund, and that is disclosed here. Then we have without payment of duty, then in that case you need not track the, separately you will not track the tax amount. So that's the reason it's going to be debtor account to sale or export sales. So with respect to IGST for SEZ supplies, also we have to track this information. One is, it is called as with payment of duty, another one is again without payment of duty. But in an SEZ transaction, you need to collect that this particular service what you are providing is being used by the SEZ for its authorized operation. So we have to take a declaration along with this particular any bills or documentation which we are executing. Then for entries which we are receiving as an advance, so bank account to advance received, we will mention as, say whatever is the amount we are receiving. So we have received an amount of say 10,000. Are we considering that as inclusive of taxes, or are we considering as exclusive of taxes? If we are concluding that it is a advance which is excluding taxes, then it's going to be 10,000 plus 18%, so it is 11,800 rupees. But if it is with the taxes inclusive, then I am going to give something like 9,000 plus 1,000 rupees is the taxes. I will try to put something like that and come out with a figure there. So if the invoice, then once the invoices are received, so once an advance comes, I will have to make a payment. So on all advances, I need to show a breakup immediately as on I receive the advance, and one entry for advances has to be passed in my books of accounts. That is where I call GST on advances 1,800 to 9% output CGST or 9% output SGST. Here it could also be a IGST transaction, because for advances under the GSTR1 you are supposed to have two columns, one separately for interstate and one separately for intrastate also. Again, a tracking is required on this aspect also. So this also will play a very vital role in your advances. So because earlier we were all used to VAT or excise where we were not paying any amount of duty on our advances. So this will be a major shift in tracking our taxes, and this will be relevant for our payment of taxes also for this month onwards, that is July onwards. Then entries for subsequent adjustment for advance received. So we are going to pass the entries, that is debtors account debit 1,41,000 to whatever is the sale value comes here, and this debtor entry is adjusted against my advance received to debtors, has to be passed. Then we have the journal entries for inwards. So this is going to take care of our purchase entries, purchase expense, whatever is the purchase or the expense head you are going to put, whether it's a B2B or a B2C, breakup has to be given. Then you give the input IGST, CGST or the SGST which is going to be put into. Then when the URD purchases come, see this is the entry what you are going to pass for a URD purchases. So purchase account debit to input IGST, input CGST, then you have to the credit account to 2.5% output CGST and 2.5% output SGST. So this has to be done, but this input will not be given immediately because this comes only after I make my payment. So this is another place where you need to have a control that as soon as it comes, it does not mean that I have this credit of this immediately. So that is the reason we need to have a control account to identify that I will take the credit only on a later date, because with respect to unregistered dealer purchases, we are supposed to make the payment and then only the credits have to be availed, and this is very important to be tracked. Then we have the 9.3 and 9.4. 9.4 this was the RCM, then we have the URD. So both are very similar entries which are going to be there. If it is a IGST transaction, then it will be a IGST supply. If it is a low intrastate transaction, we will have similar transactions which are given here. So this is with respect to that 5,000 limit. So we need to also, as I told you, you have to have separate breakups for this as well. And this can be done at the time. See, you have got a purchase, you have purchased a water bottle, assuming you have purchased a water bottle and the rate of taxes say 12%. So that amount has to be discharged. We should also track the rate also. So the rate is also very important to be tracked. So what is the rate which is applicable, which has to be envisaged, has to be taken care of at the time of purchase itself. Only then we will know what is the rate of tax which is applicable. Otherwise, again we need to start maintaining a separate Excel where you have to have each of the expenditure and what is the rate applicable, because at the end of the month you need to know how much is the tax you need to pay on unregistered purchases and how much of that you are going to claim. That 5,000 benefit also has to be tracked. So that is why
expenses IGST.
Yeah.
So immediately we have to find out which IGST comes, SGST comes, CGST comes, we have to find out immediately.
Correct, sir. You have to look at that also. That is also important.
That the person bit too different. He is little different other than the state. Because GTA also, if he receives the goods out of state, so what you pay the purchase will come on the IGST.
Yes, sir. Yes. So that is what also plays a vital role. The nature of from whom the URD is being, or where the place of supplier plays a vital role with respect to this aspect. Then with respect to inward or imports, you are going to have purchases, input IGST 6,000 to creditor to IGST payable. This can be tracked from the bill of entry. Once your bill of entry is being filed, based on the same, you will be able to take the details. Then journal entries for inward supply, that is non-taxable. So this is purchase from composition dealer, then it will purchases expense to creditors. If it is from a non-taxable or it could be exempted value, then also there is no tracking of taxes which is required. But this is required for my GSTR 2 purpose and GSTR 1 purpose also. This is very important. It has to be tracked. Whether or not this product is under GST. Then we have inward supply, how I make the payments, and these entries with respect to the 180 days have to be captured. And here with respect to the advances, once I have made an advance payment to a vendor, I will not get the credit on this. So with respect to works contractors, what are we going to do? Because this is going to have a relevance on works contracts or any real estate transaction, you will have an issue here. Because I'll keep paying advances. But when I receive an advance, I have to make the payment immediately. But this will issue, it will have an imbalance in the cash flow. So your contracts also have to be redesigned now to see when your vendor has to raise a invoice for a particular contract and when you will be eligible for taking the credit is one aspect which has to be looked. Otherwise, you will make all the payment. For example, today I am doing a project. The total project cost is 1 crore. I got 1 crore. Say we are in the month of July. July I made only expenditure. I made only a portion of the expenditure, about 20% of the tax I paid. I gave a 20 lakhs as an advance to my suppliers, and the supplier would have paid taxes, but it would not get reflected in my books of accounts. I received 80 lakh rupees today. On 80 lakh rupees, because I received 80 lakhs, I have to make the payment immediately. I make the payment of taxes also immediately. My next month I get a credit. I make a major chunk of payment of 60 lakhs in the next month. So what happens to my credit? So I have to go for a refund, or I have to wait for one more advance to come. Otherwise, this is going to have a balance mismatch with respect to the taxes. So you will have to look at the planning aspect when it is a advances which are paid for vendors or received from customers. It could play a very vital role. Then journal entries after filing the GST return. This was important. At the last, what is the entries we are going to pass? So the first entry would be based on GSTR 1. What is the entry I am going to pass? Once the GSTR 1 is being filed, I pass a 9% output CGST, 9% output SGST, and 9% output 18% output IGST account I debit, and I credit the electronic tax liability register CGST, SGST and IGST as the CGST, SGST and IGST to the input CGST, SGST and IGST. I take this amount, transfer this total credit. In this, I identify that there is some amount which was not reflected in my GSTR 2A that I transfer to a provisional CGST account so that I have a control of this aspect, so that this has not got reflected in my books of accounts, because I pass that as a credit here, and this amount I will be using as a control aspect, so that at a later point of time I have a track of it. Otherwise, these credits we may miss out on a later date, or we will not follow up with the data. So that is what happens. So that is where we have to look at. Then we have the journal entry for inward supply upon filing of GSTR 2. So not attended by the supplier. If the supplier has not done it, then it goes to my purchase account, because it's a cost for me. I can't take a credit of it. So it goes to my cost. But if it is rectified by the supplier, then I pass electronic credit, whether it is the CGST, SGST or IGST ledger, to the provisional ITC credit account. I have a check here. So this what happens, this will help me to identify and see where the purchases, how much are the credits which have not come to my account. If I have a control, this will help me to have a reconciliation on a monthly basis. So this, why is it important is at the end of the year, your accounts have to match with whatever is there in the portal account. That is where many times what will happen, we don't follow up with this used to happen when excise returns or VAT returns were being done even under the earlier regime. Only at the tax audit time all this issue would come up. But now we don't have an option, because we have to look at each and every expenditure account also for GST, correct? So we have to look at those entries. Then we have the TDS entries which are going to be reflected directly. This goes to your credit. So if you are either the e-commerce operator or the government, whenever they deduct, automatically it comes into your thing in the next month. It gets reflected on the 7th or within the 17th. Because for them also there are the timelines fixed, and they have to make the taxes within the 10th, and they have to upload the returns within the 15th. Then you have the journal entries for GSTR 3. This is a single entry which is passed to set off your credit liability with your credit which is there in your purchases. So this is what is the entry which is passed. Then I get into the transitional entries. What are the transitional credits and transitional entries? See, there is a GSTR trans 1 return which has to be filed within the 30th of September. That is going to give me the credits which are already there lying in my books of accounts, whether it is in your VAT return, excise return or your service tax return, barring the conditions. So we have to see once the conditions are satisfied, then the entire credit can be taken to your GST trans 1 return. So then we have the GST trans 2 return, which is for people who are only traders, who are not manufacturers or service providers. If they were only traders and they did not have an excisable invoice, and in those cases they have a 6 months time frame window to sell their commodities and see that they take back their credit to that particular effect. So this is one aspect which can be looked at. So for this, what are the aspects which have to be looked in? We'll look at that one. So here, assume that this is a pre-GST. In my last excise returns, I have 150 rupees of credit in my excise return, and in my VAT return I have a credit of 250 rupees. In this particular provision under 140 subsection 1, he tells that if the C forms are not received within the time, then to that extent input credit, proposed input credit is not allowed to be taken. So here, to the extent of in this particular case, 175 rupees is the total input credit, assume is not received, then I will be able to carry forward the credit of 150 and only 75, because the remaining of this whatever value of 175 rupees I have to claim it under the existing return only. So this will be a critical aspect. So you have to start following up with your returns per se. Another 10 minutes.
It will take more time, it will continue later after the 3 weeks.
Okay. It will take another 10-15 minutes. You want to take a break or you want to continue? Shall I continue? So this particular thing is about this 175 rupees. So what do? I transfer this post GST, I transfer this value from my excise credit to CGST credit. I transfer the amount from excise to CGST. Then in my VAT, what I do is, whatever is the VAT refund balance is there, I transfer only 75 rupees from the VAT account to the SGST account. This is the entry what has to be passed in my books as on 1st of July. So this is one we will have to keep in mind. Then what is the entry we will be passing? So it will be CGST account debit 150, SGST account debit 75 to SENVAT account credit 150 and VAT account, input VAT account, it will be 175 rupees. This is the entry what we are going to pass for the trans 1. Then we have unregistered manufacturer and dealer. In this case what happens? As there was no excise return filed, there will be no CGST which can be carried forward. But with respect to the VAT, he had a return of 250, but he had not submitted the C forms or Form H, so 100 rupees was not allowed. So the balance he will be allowed to take, which is 150 rupees only he will be able to take that entry, and for that he passes SGST account 150 to input VAT account. So this is the entry which is there. But if the person also has a excise invoice which is available, the carry forward of VAT as CGST and the excise as CGST. So here, even though I am an unregistered dealer under central excise, I will still, if I have an excise invoice and if the invoice is less than 1 year old, so 1/7/2016, after that any invoice is there, I will be able to take that credit, and that 10 rupees I will be able to take the additional credit along with the VAT. VAT I would have already taken. So this excise duty credit I will be given. So this is
backslide also. You are doing.
Yes sir.
You are doing the entry too.
ಇಲ್ಲ ಇದರಲ್ಲಿ URD ಅಂತ ಏನಿರಲಿಲ್ಲ. It is I am not registered manufacturer. If I am not registered under central excise, that is the meaning. So with respect to that, I get an entry credit of 10 rupee debit and 10 rupee credit. I get a credit here. Then here, this is the proviso which the trans 2 will be applicable where I am a trader but I don't have an excise invoice. Then in those cases, how I will be given a credit? Whatever sales I do, on whatever sales I transfer within the next 6 months, so every month whatever I have sold, the total CGST and IGST component, they have given rates. So if it is on CGST, it's going to be 60% if the rate is above 9%, and if it is on IGST, it is 30% on the total value, whether it is 18% and above. So if it is less than that, it is 40% or 20%. How does this work? So this is there with respect to this. This is the entry which has to be passed for the transitional account. So party account debit, transitional discount account debit to sales, because this whatever transitional credit is there, the condition is the benefit has to be passed on to the ultimate customer. So that's the reason why we are bringing a transitional discount account to capture that particular details. Then what is the entry? Once the set off is being done, after the transitional liability is done, so we transfer the CGST credit liability to transitional discount account to show that there is no profit which is being made out of this particular taxation, because I am passing it on, the benefit has to be passed on to the customers. Then here we have, this is the rate, you can see the rate, this is how it is there. A supply value is assumed to be 10,000 rupees, then the GST rate, it is 5%, then 250 becomes the CGST paid. On this I will get a credit of 100 rupees, which comes to about 1%. So this is the effective rate of CGST. It is 1%, 2.4%, 5.4 or 8.4. This becomes of the percentage of the CGST and the same percentage of IGST. So they have not changed the thing. So whether it is a CGST or IGST transaction, this has to be tracked in our trans to return, and this information has to be filed for GST trans to return. And this is how we are going to sell. Assume that the base price is 500 rupees and the CGST is at 30 rupees and 30 rupees. That is CGST at 6% and SGST 6%, which is 560 rupees. Then the eligible discount at 40% is 12 rupees. Then 548 becomes the selling price. This is how I pass on the benefit. This discount could be passed on in the invoice, or it could be passed on in the form of a credit note at a later point of time also. So what is the entry to be passed? Party account 548, transitional discount account 12 rupees, to sales 12% 500 rupees, CGST liability 30 and SGST liability 30. So this is how we are going to pass the entry. And once the transitional discount is supposed to be passed, we pass the CGST credit 12 rupees and the transitional discount at the rate of 12 rupees is being passed. And I think with this I have closed this aspect. So any queries, I am free to answer.
So you said that P&L account, whatever we maintain the accounts, that should be tallied with matched with GST portal. So we have, will we purchase any stationaries for a smaller value? That should also be uploaded
Yes.
in the GST.
In your P&L account, any item other than salary, discount, salary, depreciation and interest, other than these three financials, most of the other items will be taxable. Other than exempted products, maybe like milk and milk products, or you have a separate list of exempted products, those things also taken care of. All other items has to be GST suffered items. That is what we will have to look at.
No, GST suffered items okay. If, for example, if we purchase stationery and it is GST suffered, and I don't want to take any input of such things, smaller things. So whether that should also be uploaded in the GST portal?
Actually speaking, you have to upload it, but practically we are seeing that, see, there could be, for example, employee is claiming a reimbursement. He comes and he gives you so many invoices. It could be not only your stationery, it could be a food bill. I go to a restaurant, he goes to a restaurant, he has some food. Say in a Darshini hotel he goes, he gets a small piece of paper in that, but the GST number is being mentioned and the GST value is also being mentioned. Once you have already paid the amount, so I feel again we need not pay, because that transaction is a GST suffered transaction. That is where I told we have to maintain two registers, one from registered suppliers and one from unregistered suppliers. So if you have already tracked from the registered suppliers, you need not again pay the taxes in my way.
Not about the payment, I am talking about the uploading of that data in the GST portal.
Actually speaking, you have to upload. If you ask the rule wise, you have to upload. But practically, is it possible for us to track this? And whether the other person, for example, you went to a Darshini, had some item worth 100 rupees and he charged you 12% CGST and 6% CGST, 6% SGST, and the total value is 112 rupees you have paid him. But for him it is a B2C transaction. So he will not have uploaded it. So what happens if you upload? You will put that as a purchase, and if you upload and if it does not become a provisional credit, then again you have to pay it. It becomes a liability in your books of accounts. So in this case, according to me, this becomes a reconciliation item. Otherwise, you will be paying the taxes twice for the same transaction where you have already paid taxes. It is a GST suffered transaction. So that is the reason, if it is very small, I think we can take a stand that it is GST suffered, but still I will not upload it because the other person would not have uploaded it in the return as such. So this could become an aspect of reconciliation, is my view. Like what entries, sir? I think on a RCM, if it is a provisional entry, then I think we have to pay the taxes, like similar to our service tax. Even under service tax, we had a concept of unbilled revenue, where or few of the entries where it was done. Maybe I think we might have to pay the amount, and it will be set off at the time when the actual invoice is received. But how are you going to park the entries? Park the entries. I think provisional entries, I am not very sure on that. Yeah? We have time to think about till March actually.
How would the system take care of the out of this GST? See, amortization right, and our people will go out to Mahadev.R and consume, stay in hotel or something. They will charge this GST. Okay, and we will give our registration. Okay. How do we keep a track here? Because the SGST of other states cannot be set up against SGST of Karnataka.
But if he is going to charge you a IGST transaction, then it is at least you can take a stand that it is.
He cannot charge. He cannot charge.
But if he cannot charge, that is, I know that because of this you may have a immobile property also. He goes for a lodging facility there. Then if the other person charges a CGST and SGST, then we may not be able to take the credit. We may lose the credit.
Then we have to maintain a separate ledger account for the out of state.
According to me, yes. Or we have to have a branch in that particular location. We have to take a separate registration, or we forego that particular portion of credit. But if the volume of transaction is higher, then you also could take a stand of taking a registration in that particular state to transfer your credits accordingly.
For marketing purposes, people will go out and spend the money and they will pay tax. Okay, they will not pay any sale at all. No necessity to take a registration.
Okay.
So how do we take a credit card, pass it on to the
That will be an issue, sir. It is an issue. Because like this, there are a few unanswered queries here.
Well, there is one more question. Suppose we go abroad and spend the money. Okay. Not spend the money. We consume the services or place of supplies abroad. It is not imported here. For example, hotel only and the lodging expenses. Whether, how do we classify here? Whether it's import, whether it's exempted import?
It goes under the expenditure head only, but it may not be taxed because of the place of supply. Because the place of supply is outside India.
Can we say it as exempted imports?
It cannot be exempted imports. It will go under a head of a expenditure. For example, it could be a travelling expenditure or your business promotion or.
Classify under the GST report because it has to be part of the GST report, GSTR 2.
I think it has to go under the exempted category only.
Exempted import.
Yes.
But it is not import.
It is not an import, but exempted category we might have to give, or
Exempted purchase.
exempted purchases. Okay, thank you all for giving me a patient hearing, and I thank HiregangeAcademy also for giving me the opportunity.
Good evening. I expected. From 2 o'clock to 3 o'clock. For a change, I got it at 4 to 5. But unfortunately, it got postponed. Now it is 5 to 6. So we'll try to cover faster. I'll skip some of the slides wherein I wanted to discuss history of job work. So now we are all interested in only GST, right? So we'll discuss only on GST with a touch up on history. First thing, what was the condition for sending the goods for job work under central excise? Answer is that you have to just see and tell me. Sorry? What was the time period? Hope all of you had coffee. I won't leave you if you don't answer. So what was the time limit? 180 days for inputs. For capital goods? 2 years. So what happens if I don't receive the goods within this time limit of 180 days or 2 years? Reversal of credit. So in GST also we have a time limit, but what is the consequence for not receiving the goods? We will see that. Were there any taxes being charged in the job work invoices? Earlier? No tax? No excise? No service tax? No VAT also? Why? We had exemption from all these taxes because in excise, whenever the job work which I am doing was amounting to manufacture, there was an excise notification which exempted the activity because the principal manufacturer was paying the excise duty. So this was the condition for taking the exemption. Similarly, in service tax also, there was a notification which said if the principal who is sending the goods for job work, if he is paying the excise duty or if he is clearing the goods for exports without payment of duty, then service tax was not required to be paid. VAT, obviously, there will not be levy of VAT because there is no transfer of materials from the job worker. But in case of few job work activities like electroplating, the job worker may use some chemicals for electroplating activity. In such a case, he used to charge me VAT. But when there was no transfer of materials, then there was no tax at all. But what happens in GST? We will see that now. Whether all of us understand what is supply in GST? Yes? Yes or no? Yes. Okay. Removal of goods for job work, is it a supply? It's a supply. What is the condition for supply? One is there should be a consideration. Do we have a consideration here? No. What is the other possibility? It should get covered under Schedule 1. Is it covered under Schedule 1? Because it covers the transactions only with related party or a distinct person in other places. So is job work a supply? At least yes or no? No. I'll prove you wrong. First we'll understand what is job work. So job work meaning is very simple. It is processing on the goods which are supplied by the principal. The question which arises is, if I am using some of my materials, so I took the example of electroplating. So he will send me the components, I will use some chemicals for doing the electroplating activity. So whether this can be considered as job work or not, because the meaning says processing on the goods supplied by the principal. The answer is yes, because we can. There was a decision of the Supreme Court in case of prestige engineering in the excise regime. So there they said that if some part of the materials are used by the job worker, then also it can be considered as job work. So relying on that, you can say that even if some of the materials are used by the job worker, still it can be considered as job work. Next, is job work a service or supply of goods? Very simple answer. It is a service. Even though I am using some of the goods, I took the example of electroplating. So in this activity, I am doing some labor work and I am also supplying some chemicals. in spite of usage of these chemicals, still the entire value will be treated as if it is a value towards the service, and I will charge whatever the rate which is applicable for the job work of electroplating. I don't have to apply the rate which is applicable for the goods which I am supplying while I am doing this job work activity. Same using some components which are liable for 28%, but still I will charge 18% because for jobbing activity the standard rate is 18%. Now comes to time limit. So what is the time limit in GST for receiving back the goods? Sorry? 1 year for inputs. For capital goods? Try 1, 2, 3, 4. 3. So I will take only that answer because that is the correct answer. For inputs, the time limit is 1 year. So within 1 year, I should get back the goods. In case of capital goods, I should receive it back within 3 years from the date of sending. There is an exception for this rule. The exception is in case of molds, jigs, fixtures, tools, etc. If I am sending these goods, the limit of either 180 days or 3 years will not apply because this will get consumed within few years. So this time limit of 1 year or 3 years not applicable for molds, jigs, dies or tools. For all other goods, the time limit of 1 year or 3 years is applicable. Now what is the consequence if I don't receive these goods within 1 year or 3 years? I am sure you are not hearing this topic for the first time. You would have attended many sessions. Sorry sir? Reverse the credit. I don't know who is answering. Correct. In excise, we used to reverse the credits. In GST, it says if you are not receiving the goods within 1 year or 3 years, then it has to be treated as supply. So it is not covered under Schedule Section 7 or Schedule 1. Still it is covered. Still it is treated as supply. Why? Because Section 143 says if you are not receiving the goods which are sent for job work within this time limit, then it has to be treated as supply, and the date of supply will be what? After 1 year or date of sending the goods? Date of sending the goods. So what happens if you don't receive back the goods within 1 year? You have to identify what is the value of goods. So you have sent inputs for processing. So what is the valuation which you will adopt for this? You have to see the valuation principle, Rule 30. So Rule 30 says you have to adopt the cost of acquisition plus 10%. The value of input is 100 rupees per unit, but you are not supposed to pay GST on 100 rupees because the valuation rule says 100 rupees plus 10 rupees. So 110 rupees you have to pay GST at the applicable rate along with the interest. So what is the interest rate? Delayed payment 18%. So for 1 year you will pay 18% tax if the goods are subject to 18% and 18% interest. Next question, what happens to this tax? So after 1 year you will pay this amount treating it as supply. You don't have to issue any invoice because whatever challan you are issuing, that challan will be considered as invoice for this taxation purpose. The next question is, say after 1 year, 1 month you have received back the goods, but I have already paid the duties applicable along with the interest. So what happens to this tax? Can I take this amount as credit again after I receive back the goods? I am hearing only tax, job worker. Okay, correct me if I am wrong. What you are saying is you raise an invoice on the job worker, let job worker take the credit.
So once that 1 year that time lapse, the sender is going to raise the invoice of job worker, and then he is going to take the credit. Once he sends back the goods, it is as good as he has made the supply. The job worker has made the supply.
There is one important condition for taking the input tax credit. The condition is I should make the payment for the goods which are received within 180 days and the payment should be towards value of taxable supply and the tax amount. So in this case, I am the supplier of goods, so I am charging my job worker. So what he is saying is let job worker take the credit based on the invoice which I am issuing. Whether job worker will make the payment for this goods which I am supplying, he will not make the payment, right? So I am not satisfying this condition. So this possibility is not there. Any alternatives?
You can take back the credit once you...
There is a genuine question because even I don't have the answer. Is there any possibility? Yes, no. If you keep it, then I'll take time.
You can take back the credit.
Sorry, sir?
You can, once material received from the job worker, you can take back the credit, but the rule I have to touch.
No rule.
They will give.
They have to give, but as on today, that rule is not there. So this is very dangerous. Maybe they will wait for 1 year because this problem will start when we are nearing 1 year and we are not received back the goods. Now we are happy because only 1 month is over. Still we have 11 months for this problem. As of now, there is no solution for this. The best way is to get back the goods. Once you are reaching this 12 months, then again send it back. Otherwise, there is no option to take back this amount as credit.
Otherwise, you have to make the record as to receive and one more delivery challenge also.
I don't know whether you can do it in GST regime when you have this e-waybill concept. I know this is what happening in excise regime. Nobody used to get within 180 days. It's all only documentation. You can do in GST also. You can take his number.
And I'm telling government is not giving the option what to do that. Because there is no revenue leakage in this. Government is not.
Revenue leakage is there, no sir. So what you are saying is, don't send back the goods only to documentation.
I'm telling after one year, 1 month, if they are retelling there is no option to take back the credit, how to go this way? If option is there, I have to remove, I can take back the credit whenever material is.
Yeah, they have to address this because this is a practical issue. Anyway, we'll wait for this. The first condition for sending the goods for Java case, it says intimation has to be given for all the removals. Till now, we are not giving any intimation. The procedure which we are following in excise is raise one Java challan, delivery challan, annexure 2 challan, which is famously called as. We used to send the invoice. We are not intimating the department. If it is non-semi-towed items, then it is only DC. There was no requirement of annexure 2 also, and there was no condition that it was supposed to be received within 180 days or 1 year or 2 years. It was there only for semi-towed goods. But now there is no differentiation for all the goods. Inputs rule is 1 year. Capital goods 3 years. But we have to give the intimation. So there was a doubt whether I need to give intimation for each and every supply. But they have clarified on quarterly basis you have to give the details of the goods which you have sent for job work and which you have received from the job worker. It is on quarterly basis and it has to be filed by 25th after the end of the quarter. So now we are in July, August, September, you have to file the statement by October 25th. So till now you are filing ST3 return on October 25th. So now on you will file ITC4. ITC4 is the statement in which you will give the details of goods sent or goods received back from the job worker.
Sir, even it is within the state or outside of the state, also the same sir procedure, job work?
Time limit you are asking or
Time limit, not
filing of this statement?
Filing, not filing, sir, documentation. That delivery
Documentation same sir.
Delivery challan and
Yeah, it is same. All over India it is same. Time limit we have discussed. No time limit for mold, dies, jigs, fixtures or tools. Next question is, after processing of goods, can I send these goods back to my customer without receiving back to my factory? The answer is yes. There is a specific provision which provides for this. However, if the job worker is unregistered, then I cannot send the goods to my customer from unregistered job worker place. So if I am planning to send the finished goods from job worker place, first I have to see whether the job worker is registered or not. If he is registered, no issue. But if he is not registered, then I should add his place as my additional place of business in my registration certificate. There is a issue here. If you see, there is no restriction even if the job worker is outside the state. But technically there is a challenge, because if you are doing this registration, addition of this place in Karnataka, and if you have a job worker who is unregistered outside the Karnataka, then you cannot add his place as additional place in your registration certificate. Technically it is not being permitted, even though law doesn't bar from it. So what is the place of supply? And yeah.
Sir, if we add that job worker as an additional place, what if the job worker is working for another person as well?
What is the?
The job worker is working for another person as well, just like I'm looking for job work, some other person is working.
There may be 100 suppliers who are supplying to one job worker for job work. So his place will be there in 100 registration certificates. That is allowed, no restriction. Now we'll see what is the place of supply if I am sending the goods to my customer from customer place. Sorry, job worker place. Excuse me, madam. So I'll take an example. Say my job worker is in Tamil Nadu. So I have a customer in Tamil Nadu. So I want to send these goods to my Tamil Nadu customer directly after these goods are processed. So what is the place of supply and what tax I should charge? Should I charge CGST, SGST because this is being supplied from Tamil Nadu job worker to Tamil Nadu customer, or should I charge IGST because I am in Karnataka? IGST. Because the place of supply I should see from the main person. It should not be seen from job worker's perspective. The responsibility of accounting for the goods which are sent for job worker is always of the person who is sending the goods for job work. I cannot say that the job worker has misused the goods and I will not pay any duties. That will not happen. So it is always the principal supplier's responsibility. So this is covered. Credit we have covered. Scrap. Yeah. If any scrap or waste is generated, then they have given an option that the job worker can bill to the customer. It is not required that I have to get back the goods and I should raise the invoice. Only in case of waste and scrap they have given this option. So I can do this adjustment when I am making payment to him. Say I am supposed to pay 10,000 rupees for the job work processing. He has a scrap for which he will get around 2,000 rupees. So what I will do is, you sell these goods, deduct 2,000 rupees from the 10,000 which is payable from me. So I will pay only 8,000 rupees to him. This is permitted. So is job work liable for GST? Job work charges. Till now I was not paying excise duty, no VAT, no service tax. Today should I charge GST if I am doing jobbing to principal supplier? Yes? Yes. If I am registered, I have to charge GST. There is no exemption. If I am unregistered, what happens? RCA. The person who has sent the goods for job work, he will be liable to pay tax under reverse charge mechanism, section 9(4). So what is the time of supply? The time of supply is whatever is applicable for the services. So the rule for service is, I should raise the invoice within 30 days when I am completing the service. If I am not raising the invoice within 30 days after I do the job work, then the date of completion will be considered as the time of supply. If I am receiving an advance from the principal supplier for the job worker, then the date of receipt will be considered as the time of supply, according to which I should raise a invoice. because job work charges are liable for GST, there is an advantage for the job worker. So what is the advantage? Till now what was happening? He was not supposed to pay central excise duty, service tax or VAT. Therefore, he was not eligible for any credits. Say he has a building for which he is paying rent along with the service tax. He was not eligible to take the credits. But now what happens? Because his job work charges are liable for GST, he can take the credit of whatever GST he is paying on his expenditure. It could be rent, professional charges, telephone bills, courier, etc. So what is the advantage for the principal supplier?
Can reduce the cost.
Yes, the cost should come down in GST regime. Earlier he was charging me 20 rupees per unit for jobbing. So he cannot charge 20 rupees now because his credits have increased. So he should charge me 18 rupees or 19 rupees. So for this I should negotiate. So we discussed that if I am not receiving the goods within 1 year or 2 years, then I will see what is the value of goods at which I have acquired the goods, add 10% and pay the taxes. There could be a cases wherein I have sent semi-finished goods for processing. Then what is the valuation? Again the valuation will be as per cost of production plus 10%. Now what is the documentation which is required for job work? So it says delivery challan has to be issued for sending the goods for job work. So what are the contents of the delivery challan? It will have all the contents which is there in your tax invoice. So instead of calling it as tax invoice, you are calling it as delivery challan because it will have the details of the person who is sending for job work, the person who is doing the job work, what is the HSN of the goods, value of the goods, rate of tax which is applicable and the tax which is applicable for this along with the rate of tax. Why this is given? Because if you are not receiving back the goods within this time limit of 1 year or 3 years, then the same challan will be considered as tax invoice. So you have to see what was the rate or what is the tax amount which is mentioned in this and you will pay the same amount. Do we have e-way bill concept now? We have? We don't have. As of now it is postponed, but instead of e-way bill, so what Karnataka is doing, they are saying they have amended the e-Sugam notification. So they are saying you issue an e-way bill. I think they have covered the same list of goods. In case of specified goods, they have specified around 41 categories of goods. The important one is machinery and its parts, hardware, electrical items, electronic items, furniture, dry fruits. So these are all some of the examples which has been covered in this e-Sugam notification. So whenever I am sending any of these goods for job work, then along with this delivery challan, I have to raise e-Sugam or e-way bill, whatever is being called. This is till e-way bill is activated in GST. I think for the time being they have postponed it, so the state governments have the power to have whatever documentation they had before GST.
Unregistered dealer is to come home while sending back, whether it's mandatory.
Sorry sir.
For unregistered
Can you lift your hand? I don't know who is talking.
unregistered job worker.
Ha.
While sending back your goods, how is raising the issue?
See, it is required only in case of specified goods. If it is specified goods and the job worker is unregistered, then the recipient should raise a challan. Yeah, in case of transactions with unregistered person, it is the responsibility of the recipient to raise this e-Sugam or e-way bill. So what are the conditions for delivery challan? It says we have to raise 3 copies. One is for consignee, one is for transporter, last one is for consigner. In the contents, GSTN, HSN, value, tax rate, tax amount. Place of supply is required only in case of interstate movement of goods. I am sending goods to Tamil Nadu for job work. Then I had to mention what is the place of supply also, because why place of supply is important? To decide on type of tax payable, whether to pay IGST or to pay CGST, SGST. Because instead of mentioning IGST, if I mention CGST, SGST, then Instead of Tamil Nadu getting the revenue, Karnataka will get the revenue. Then Tamil Nadu will question you. So transitional provisions. 1 month is already over, but still we have time to comply this. We have sent goods under job work before GST. So how we should treat it? The time limit for inputs was 6 months. For capital goods it was 2 years. So they are saying if it is inputs, they are giving 6 months more to receive back these goods. So from July 1st, December 31st is the last date. So if you have sent any goods on which you have availed credit, it is not only Senmat availed goods, it could be VAT availed goods also, because this rule is there even in the SGST law. So if you have sent any goods for any processing, you should ensure that you receive back these goods before December 31st. Otherwise what happens? You have to reverse the credit, because this is the supply which you have made pre-GST. So you have to identify all these cases, reverse the credit along with the interest. This is the rule.
It would declare not to that.
They are not addressed what should be done with respect to capital goods, because they are covering only inputs, semi-finished goods or finished goods. There is no mention of this capital goods. So what we should do in case of capital goods? Because they are not mentioned, I will not follow the 6 months or 2 years. Because when the job worker is sending back the goods, it is not a supply as well, correct? Because I am not paying any consideration. I am receiving these back goods which are belong to me. So he will not charge me anything, so I will not pay any taxes. So no issue in case of capital goods. But in case of imports, semi-finished goods or finished goods, I should ensure that I receive it back within December 31st. And in Tran 1 form, the details of the goods which are lying with the job worker has to be mentioned by the supplier as well as the job worker. If the job worker is registered, ensure that, say ABC Limited, the stock with the job worker is 100 kgs, value is 1 lakh. The job worker should also mention that he has received the goods from ABC Limited, 100 kgs, 1 lakh. Otherwise, you will have a problem, because this is being filed online, there is going to be a reconciliation of these quantities.
What happens if he is unregistered?
If he is unregistered, only the supplier will mention the details. So few issues in job work. So one of the condition was intimating the department for sending goods for job work. I have non-taxable goods. Should I intimate? Yes or no? Only you have 2 options. No. Answer is no, because even if you don't intimate, what is the implication? They can ask you for tax amount. But because this is a non-taxable item, there is no tax amount which is payable. So in case of non-taxable goods, no need of intimation. So scrap removal from job worker place is possible and it is permitted in the law itself. I have sent the goods to Tamil Nadu for job work. So I have to send these goods again for further processing to Andhra Pradesh. Can I do it? There is no restriction, but you should ensure that this 1 year is computed from the original removal for the first job worker in Tamil Nadu. It is not the second count. We have sent the goods on April 1st, 2017, and you are sending back these goods again from this job worker to another job worker on March 31st. Still this 1 year will be counted even in case of second job worker from April 1st only. It is not a fresh date.
Transportation documents from one job worker to another job worker. That the job worker has to do like that, or the principal has to do?
Sorry, documentation for further sending of.
Transportation purpose.
He will raise a e-way bill if it has come during that time.
Job worker has to
Job worker will raise e-way bill because he is causing the movement of goods.
delivery challan no need to raise once again to
Delivery challan he will raise. The supplier will raise a delivery challan. There are 2 documentation which is required. One is delivery challan, another is e-way bill. E-way bill will be raised by the job worker, and the principal supplier who has sent the goods, he will raise a delivery challan and he will send it to the first job worker place. So when the first job worker is sending the goods to second job worker, he will have two documentation: e-way bill from this job worker 1 and the delivery challan from principal supplier.
Again, principal will not to write the second delivery challenge to new job worker.
Delivery challan is required. E-way bill is not required from you, I am saying. Delivery challan from original supplier, sir. The job worker will raise e-way bill. Can I send goods for job work to my own branches in other state? Is it not covered under Schedule 1 liable for GST? Because this is a movement of goods to my own branch in other state. So there need not be any consideration. So I am sending the goods for job work wherein there is no consideration.
Cost to cash flow reverse.
Can I send or not? Without payment of GST.
Out of state you can pay up GST.
It is not a sale, you can send it.
It is? No, even stock transfers are liable for GST, sir, whenever it is with the same person.
But this is not a stock transfer, no, this is only for who is going for this. So no need of tax.
Interest means we need to pay this.
Yes, you have to pay.
Yes.
The answer is no. Because job work provisions is a specific provision which will override the other provision. So here, what I have to ensure is, I should ensure that there is some processing which is being done by my branch and it has to be received back to my own unit. But there is also option which they have given wherein I can sell these goods to my customer from the job worker place. So I have two options. One is sell these goods to my customer directly from this job worker, that is my own branch in other state, or receive it back after processing. This is allowed. No restriction in GST. This can be done.
So branch has value added customer, the things are
They will charge GST now for that. If branch is doing some value addition, they have to charge you something along with GST because this is covered in Schedule 1. So I will take the credit. Sorry, sir?
Free issue item, suppose paint, electrodes or job worker, then whether physical can send it to job worker free issue item.
I am not getting the question.
Job worker is doing some machining work.
Job worker is doing machining work.
Machining work. I am sending material. After that they need some special electrode or painting, some painting work. Shall I send it to a painting and electrode consumer?
Free issue material for doing this jobbing activity. Everything you will send to job worker with free of cost only, right?
But it will come, it is not coming back. Because it is consumable, it is consumed at job worker.
But he is consuming it for processing my goods.
Yeah, mine.
Yeah, it can be done. It can be done, sir. So disclosure requirement. So GSTR 1, it requires us to mention the serial number of the job work challan which we have used. Say in this month, July month, I have used 10 challans for job work. Serial number 1 to serial number 10. So in GSTR 1 at the last page, I should mention that serial number 1 to serial number 10 have been used for sending the goods for job work. This is one requirement. Next is, if I am not receiving the goods within this time limit of 1 year or 3 years, there is no way with which the department can identify these transactions. So I have to voluntarily disclose these transactions and I should pay the applicable taxes along with the interest. This is second requirement. The third requirement is, as I said, all the closing stock as on 30th June. It has to be mentioned in your Tran 1 by your job worker as well as the supplier. If there is a mismatch, then they will question the products. Next, on quarterly basis, because there is a condition of intimating all the transactions, we need not do the intimation for each and every transactions. On quarterly basis, we have to give the intimation. This intimation will be in form ITC-04, which is a online form. So quarterly we will file July, August, September. The due date is October 25th. The details will be the details of goods which are sent for job work, the details of goods which are received back after job work. Both these details should be there in this ITC-04 statement.
Yes, on this ITC one, they can make also. Which one is 12 months, so many are 12 months.
But it is not so easy because you are filing this on quarterly basis. What you are doing is you are giving the details of the job work, which the transactions wherein you have sent for job work for this quarter, and you are giving the details of the goods which are received back after processing. So who will correlate this? What you have sent in first quarter, what you have received in second quarter, who will correlate this? Yeah, this correlation has to be done by the supplier. Government is not doing this because there is no mechanism, or it is not easy to identify them. So this has to be done voluntarily by us. You will like the next slide. So any doubt?
Actually, see, finished goods rate is 5% GST. And job work, what you do, all the raw material and packing material are different rates of GST. That maybe 18%, 12%, 5%. So in the DC can be writing single delivery charge. All the items in all the tax rate.
You have to mention. Say you are mentioning two items, one is 28%, another is 18%.
Yes.
You have to mention all the
Both one delivery charge.
Sorry, sir. Which return? ITC 4 you are saying.
So it's ITC 4, like if you're sending the job of today and getting it in a day, that also should be.
When you file the statement, in the first column you will say goods sent on 3rd August. In received details you will mention goods received on 3rd August. Same transaction will be there. Both the details should be there. It could be 1,000, 2,000, still there.
Not if job workers are not.
It is not linked. So you don't have to worry about the what job work is doing. So it is your responsibility to show the details because the accounting is on you. You are the responsible person who has to account for this goods. Otherwise you will be penalized. So if there are no questions, you can clap.
Same performance.
That will come on.